Hey everyone, welcome back to Corporate Decoder, the place where we break down company filings so you don't have to. And let me tell you, Canopy Growth is trying to raise some serious cash with a move that's as common as a weed in their industry, but maybe less expected. We're diving into Canopy Growth's latest report, a signal that this cannabis giant is looking to tap the market for some fresh funding. It's all about their new at-the-market equity program, which basically means they're getting permission to sell their own stock whenever they feel like it, up to a pretty big amount, $200 million to be exact. Think of it like having a credit card with a big limit that you can use whenever you need a cash advance. But instead of money, they're getting shares in exchange. This move isn't exactly a surprise for companies in growth mode, but it does tell us a story about where Canopy Growth sees itself heading and what it thinks it needs to get there. This report details a fresh equity distribution agreement with their agents BMO Capital Markets Corp and BMO Nesbitt Burns Inc. This agreement is essentially the paperwork that allows them to sell up to $200 million worth of their common shares. This isn't out of the blue, it actually replaces an older agreement from February showing they're adjusting their strategy. It's important to note how they're splitting this. They can sell shares through the US agent in the United States and through the Canadian agent in Canada, but there's a catch for Canada. They can only raise up to $50 million there. So the big players in the US market, but they're keeping the door open for Canadian investors too. In the US, they're going to be selling these shares in a way that's commonly called an at-the-market offering. This is a pretty standard way for companies to sell stock over time directly on stock exchanges like the NASDAQ, or through other ways their agent can manage the sales. They're not just dumping all the shares at once. They will be selling them bit by bit, responding to what the market will bear. What this really means is that Canopy Growth will decide when and how much to sell based on what's happening in the market, how their stock is performing, and how much money they actually need. It gives them flexibility, but it also shows they're planning for future needs or perhaps unforeseen challenges. They're not obligated to sell any shares at all, and they can change their mind at any time. This whole US offering is backed by their shelf registration statement. It's like a pre-approved plan that allows them to sell stock over a period without having to file a new registration for every single sale. They filed this back in June of last year and have updated it since, showing they've been planning for this kind of capital raise. Now, while this report tells us about the agreement, the full details are in the actual equity distribution agreement attached as an exhibit. This filing is really about giving the public notice that they'd entered into this new arrangement. They also had to get a legal opinion from Casselsbrock and Blackwell LN. This is basically a law firm giving their stamp of approval, confirming that the shares they plan to sell are legally sound and can be offered to the public. It's a standard part of these kinds of offerings, ensuring everything is above board from a legal standpoint. The most important exhibit here, the big one, is the equity distribution agreement itself. This is the actual contract signed between Canopy Growth and the banks that will help them sell their shares. It lays out all the terms and conditions, how the sales will happen, and what each party is responsible for. They also included a press release from August 29, 2025. This is likely their official announcement to the public and investors about this new funding plan. It's usually where they put their spin on the news, highlighting the positive aspects and their strategic intentions. So what's the story here? Canopy Growth, a company that's been navigating the complex and often volatile cannabis market, is preparing to raise substantial capital. This at-the-market program gives them a lot of flexibility to sell shares as needed. But it also means they might be anticipating future expenses or looking to strengthen their financial position. It's not necessarily a sign of immediate distress, but it is a proactive move to ensure they have the resources to operate and grow in a competitive landscape. What does this mean for investors? Well, it can dilute existing ownership if they issue a lot of new shares. However, it also means they're likely investing in new opportunities, M&A, or shoring themselves up against potential market downturns. Given the cannabis industry's journey, being well capitalized is crucial. This suggests Canopy is looking to stay in the game and potentially expand its reach. It's a signal of intent, a confirmation that they believe they have a path forward that requires more funding than their current operations might solely provide. Now, looking at this more broadly, Canopy Growth has been a major player, but the cannabis industry itself has faced significant regulatory hurdles and shifting market dynamics. Companies like Canopy need to be agile and well-funded to survive and thrive. This move to raise capital through at-the-market offering is a common strategy for companies looking to fund growth acquisitions or simply to ensure they have enough cash on hand. It's a strategic decision that reflects their assessment of their current financial health and their future investment needs. It shows they are making plans and securing the resources to execute those plans. Whether this capital infusion leads to significant growth or simply stabilizes their position remains to be seen, but for now it's clear they are focused on securing their financial future in a competitive and evolving industry. Alright, that's our breakdown of Canopy Growth's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this is a smart move or a sign of underlying issues? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions with fellow investors. Thanks for watching. See you next time.